Be Wealthy and Smart, episode 1049.
Step into a world of wealth and financial freedom without budgets, boredom, or bosses on Be Wealthy and Smart. And now, here's your host, Linda P. Jones.
Welcome to Be Wealthy and Smart. I'm Linda P. Jones, America's Wealth Mentor, empowering women and men worldwide to financial freedom. On today's show, we're going to talk about, is it time to buy low? Because the numbers that we got last week, I thought were a little bit blown out of proportion, and I'm going to share with you why. Now, it's true. The Bureau of Labor Statistics reported on Friday that the U.S. Consumer Price Index rose last month by 8.6% from a year ago. And that was the fastest increase since December of 1981. And that gain was at the top of economists' expectations. The so-called core CPI, Consumer Price Index, which strips out food and energy prices, also came in above estimates at 6%. But while the media was harping on how bad it was, core CPI of 0.6% was higher than expected, yes, with the expectation at 0.5%, but it was even with April's 0.6% number, so it didn't get worse sequentially. And that's what they didn't tell you. All they could do was harp on the negative and really pound the table and say, things are really awful and getting worse. Well, that's not exactly true. The core consumer price index stayed the same as April, and that's what they weren't telling you. Now, I don't know why they're so negatively biased right now, but the media is negatively biased right now. They're not fair and balanced. They're not optimistic. They are definitely in the pessimistic camp. And I'm just going to call it as I see it. Because the core CPI wasn't getting worse, that means we had some improvement. And that means we could be close to things making a turn, which is what I believe is happening. We are very close to that turning point. Now, the CPI report is mostly housing and talked about high rents and energy. And another thing that came out was the OECD report, which is the Organization for Economic Cooperation and Development. And it said inflation is mostly war-related. That means it's oil and gas and commodity prices that are due to what's going on with the uncertainty with Russia and Ukraine. But here's what they're also not telling you. We're seeing improvement and discounts in cars, used cars, clothing, furniture, real estate. The mortgage industry is practically already in a recession because there's been so many layoffs and so few homes have sold compared to what was selling before that it's been really, really hard in the mortgage industry. We've also seen some commodities start to decline. Remember when lumber was $1,700? Well, now it's $555. And other commodities have come down too, such as copper and iron ore and others. So commodity prices have already started to come down. We're starting to see markdowns on clothes and cars and furniture. The April core CPI was the same as May's core CPI. And this week, the Fed is going to meet. We'll probably raise interest rates by 0.5%, 50 basis points, possibly 75 basis points, but probably 50. And that's pretty much already priced in the market. Some other things we have going for us are things like stock buybacks. And of course, Warren Buffett went and bought some more Apple. And Apple is one of the companies that does a lot of stock buybacks. We have good earnings, particularly in technology, which is now priced around where it was in 2003. So technology prices have really come down and are actually undervalued now in many quality technology names. With housing starting to cool in some places, we're seeing more inventory come on and fewer home sales and less multiple offers, which means that housing is getting a little bit more aligned into equilibrium, which is what we need to see. More supply needs to come on the market. Now, there is starting to be some rumors of the war being negotiated to end, and reconstruction talk has already started. There are rumblings of companies who are looking to get involved in that reconstruction process. So I think we're very close to a turn here where the shorts are going to have to cover. They are going to lead us higher. We may have a down day today when you're listening to this podcast. It was a follow through from Thursday and Friday, which may be peak capitulation. But we're very close to turning this corner and being finished with the deep volatility because things are incrementally starting to get a little bit better and a little bit better. And anyone who's really looking closely at the numbers, I think, will see that, although that may not be what they report in the media. But it's there. Inflation isn't getting worse at a rapid pace. It's getting a little less worse at a little bit slower pace, if you know what I mean. What they call that is the delta, the change. The change of inflation has started to slow in terms of the pace of the change of the inflation. And that's what you start to see before you actually get lower inflation numbers. So I think we've seen the early inklings of this tide turning. And I think that right now is a really good time to make some buying decisions, particularly in technology, precious metals, and quality companies that are really going to upgrade your portfolio. I still see that we have a rip-roaring bull market coming very soon. And it's going to surprise a lot of people. So get ready. If you haven't yet subscribed to Be Wealthy and Smart, hit the subscribe button and you'll be notified as soon as new podcasts are available. That's all for today. Until next time, live the good life and be wealthy and smart.
Thank you for listening to Be Wealthy and Smart with Linda P. Jones. Share the wealth and tell your family and friends about the show. Check out our website, blog, and social media for more riches at www.bewealthyandsmart.com.